Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest updates surrounding the Vietnamese Dong exchange rate against the United States dollar. And this is becoming one of the most talked about topics in global currency markets right now. Investors, economists, forex traders, exporters, and financial analysts are all paying close attention to the movement of the Vietnamese Dong, because major changes in the global economy are influencing currencies across Asia. From rising interest rates in the United States to growing trade activity in Southeast Asia, the Vietnamese economy is now standing at the center of important financial discussions. Over the past few months, the US dollar has remained very strong in international markets. Whenever the Federal Reserve in the United States keeps interest rates high, the dollar usually gains strength against many foreign currencies. This has placed pressure on several emerging market currencies, including the Vietnamese Dong. However, despite global uncertainty, Vietnam's economy has continued showing resilience through exports, foreign investment, manufacturing growth, and rising international trade activity. The Vietnamese Dong remains closely connected to the performance of Vietnam's export sector. Vietnam is one of the largest manufacturing and export hubs in Asia today. The country exports electronics, textiles, footwear, agricultural products, machinery, and many other goods to international markets. Because of this, exchange rate movements directly affect businesses across the country. A weaker dong can help exporters because Vietnamese products become cheaper for foreign buyers. At the same time, a weaker currency can increase import costs, especially for fuel, machinery, and raw materials. Financial analysts say Vietnam's central bank is trying to maintain a careful balance between supporting economic growth and protecting currency stability. Authorities do not want excessive volatility in the exchange rate because sudden movements can create panic in financial markets. Instead, Vietnam has followed a more controlled and flexible exchange rate approach, designed to maintain investor confidence while supporting trade competitiveness. One of the biggest reasons global investors remain interested in Vietnam is the country's rapid economic transformation. Over the last decade, Vietnam has become one of the fastest growing economies in Asia. International companies continue moving manufacturing operations into Vietnam as global supply chains shift and diversify. Many businesses want alternatives for production centers, and Vietnam has benefited significantly from this global transition. Major multinational corporations have expanded factories and industrial operations throughout Vietnam. Technology manufacturing has become especially important. Electronics production continues growing rapidly, helping Vietnam strengthen its position in international markets. This long-term industrial growth gives investors confidence in the country's economic future, even during periods of currency fluctuation. Another important factor affecting the Vietnamese Dong is inflation. Inflation influences the purchasing power of consumers and also affects investor sentiment. Vietnam has generally managed inflation more effectively than many other emerging economies. Stable inflation helps maintain confidence in the financial system and supports broader economic stability. Analysts believe that controlled inflation gives Vietnam more flexibility in managing its currency during uncertain global conditions. Meanwhile, global forex traders continue monitoring every statement coming from the United States Federal Reserve. If the Federal Reserve eventually cuts interest rates, the US dollar could weaken slightly against foreign currencies. That may reduce pressure on emerging market currencies such as the Vietnamese Dong. However, if inflation in the United States remains high and interest rates stay elevated for longer, the dollar could continue dominating global currency markets. The Vietnamese economy is also benefiting from strong foreign direct investment. Investors from countries including South Korea, Japan, China, Singapore, and the United States continue expanding operations inside Vietnam. Foreign investment supports industrial growth, infrastructure development, job creation, and export production. It also increases demand for the Vietnamese dong, because international companies need local currency to operate inside the country. Vietnam's manufacturing industry remains one of the key drivers behind economic growth. Industrial parks and export zones continue attracting new investments every year. Factories producing smartphones, electronics, clothing, furniture, and machinery have helped transform Vietnam into a major global production center. This expansion has improved Vietnam's international trade position and strengthened long-term economic expectation. Tourism recovery is another positive sign for Vietnam's economy. International tourism has gradually improved as global travel activity increases. Tourists bring foreign currency into the country, supporting economic activity and helping stabilize foreign exchange reserves. Hotels, airlines, transportation services, restaurants, and local businesses are all benefiting from rising visitor numbers. At the same time, remittances from overseas Vietnamese communities continue supporting the domestic economy. Billions of dollars flow into Vietnam each year through remittances sent by Vietnamese workers and families living abroad. These inflows provide additional foreign currency support and strengthen economic stability during periods of global market volatility. Economists also believe Vietnam's young population provides a major long-term advantage. The country has a growing workforce and increasing consumer demand. Rising incomes and urban development are creating opportunities across retail, technology, construction, and services sectors. Strong domestic consumption helps support economic growth, even when global conditions become challenging. Curry traders continue debating the future direction of the Vietnamese dong. Some analysts believe the currency could stabilize or strengthen gradually if global financial conditions improve. Others argue that continued US dollar strength may keep pressure on Asian currencies for a longer period. Much depends on Federal Reserve decisions, global inflation trends, energy prices, and geopolitical developments. Energy prices remain another major issue, influencing global markets. Vietnam imports significant amounts of energy products, meaning higher oil prices can increase inflation and place pressure on the economy. Rising energy costs affect transportation, manufacturing, and consumer prices. That is why international oil markets are closely watched by Vietnamese policymakers and financial analysts. Trade relations between Vietnam and major global economies also play a critical role in the exchange rate outlook. Vietnam has signed multiple free trade agreements that expand access to international markets. These agreements support exports and help attract foreign investment. Strong trade performance usually supports confidence in the local currency because exports generate foreign exchange earnings. Vietnam's relationship with the United States continues attracting attention as trade activity between the two countries grows. The US remains one of Vietnam's largest export markets. Strong demand from American consumers supports Vietnamese manufacturing industries. However, exchange rate movements can affect trade competitiveness, making currency stability an important issue for exporters. Financial experts say Vietnam's central bank still has important tools available to stabilize markets if volatility increases. Foreign exchange reserves help authorities manage excessive currency swings. Stable reserves are viewed positively by international investors because they provide confidence that policymakers can respond to market stress if needed. Banking reforms and financial modernization are also contributing to Vietnam's economic development. Authorities have been working to strengthen banking regulations, improve financial transparency, and modernize digital payment systems. A stronger banking system helps attract international capital and supports long-term financial stability. Vietnam's digital economy is growing rapidly as technology adoption increases across the country. E-commerce, fintech services, digital payments, and online businesses are expanding quickly. Young consumers and increasing internet access are helping drive this transformation. International investors sees significant long-term potential in Vietnam's technology sector, which may contribute to future economic growth. Agriculture remains another important sector for the Vietnamese economy. Vietnam is one of the world's leading exporters of coffee, rice, seafood, and agricultural products. Currency movements directly affect agricultural exporters because exchange rates influence international competitiveness and export revenues. Global investors continue viewing Southeast Asia as one of the most promising economic regions in the world. Vietnam has become one of the region's strongest performers due to its manufacturing expansion, strategic location, and growing international partnerships. Many analysts believe the country could continue attracting investment for years to come if economic reforms and infrastructure development remain strong. Infrastructure investment is becoming increasingly important for Vietnam's future growth. The government continues investing in roads, ports, airports, industrial zones, and transportation systems to support manufacturing and trade expansion. Improved infrastructure helps increase efficiency and strengthens Vietnam's competitiveness in global markets. At the same time, global uncertainty continues creating risks for emerging markets. Geopolitical tensions, shipping disruptions, inflation concerns, and slowing growth in some major economies could still affect international trade. Vietnam's economy is highly connected to global supply chains, meaning external shocks can influence economic conditions relatively quickly. Financial commentators have also discussed the psychological impact of currency fluctuations. Exchange rates often affect public confidence and business planning. Stable currency management is therefore considered essential for maintaining investor trust and supporting long-term economic development. Some analysts believe the Vietnamese Dong may gradually strengthen over the long term as Vietnam's economy continues expanding. Rising productivity, increasing exports, and foreign investment growth could improve the country's financial position over time. However, short-term movements in the currency will likely remain tied to global financial conditions and US dollar performance. The strength of the US dollar remains one of the most important global financial stories right now. When the dollar strengthens, many emerging market currencies face pressure because investors move capital toward safer assets. This trend has affected currencies throughout Asia, Latin America, and Africa. Vietnam is not alone in facing these global financial challenges. Despite international uncertainty, Vietnam continues receiving positive attention from global institutions and investment firms. Many international banks and economists maintain favorable long-term forecasts for Vietnam's economy. Strong industrial growth, export diversification, and demographic advantages continue supporting optimism about the country's future. The manufacturing transition happening across Asia has significantly benefited Vietnam. Companies seeking alternative production locations have increasingly chosen Vietnam due to competitive labor costs, improving infrastructure, and trade access. This shift has strengthened Vietnam's role in global supply chains and increased international economic importance. Investors are also watching inflation trends inside Vietnam carefully. Stable inflation allows policymakers more flexibility in managing interest rates and supporting growth. If inflation remains controlled, confidence in the Vietnamese dong could remain relatively stable despite global volatility. Currency markets often react very quickly to economic data releases and central bank statements. Even small changes in inflation numbers, employment data, or interest rate expectations can influence investor sentiment. That is why traders continue monitoring both domestic and international developments on a daily basis. Vietnam's growing middle class is another important factor supporting economic expansion. Rising incomes are increasing consumer spending on housing, technology, transportation, education, and services. Strong domestic demand helps create a more balanced economy that is less dependent entirely on exports. The country's strategic geographic position also supports long-term economic growth. Vietnam is located near some of the world's most important trade routes and manufacturing centers. This location gives the country significant advantages for international commerce and industrial development. Meanwhile, international financial markets remain sensitive to geopolitical developments around the world. Conflicts, sanctions, trade tensions, and political uncertainty can all influence currency markets. Investors often seek safer assets during periods of uncertainty, which typically supports the US dollar. Vietnam's leadership continues emphasizing economic modernization and global integration. Policies focused on industrial growth, infrastructure investment, digital transformation, and international trade partnerships are helping position Vietnam as a major emerging economy in Asia. Several financial experts believe the long-term fundamentals of the Vietnamese economy remain positive despite short-term exchange rate fluctuations. Strong exports, manufacturing expansion, foreign investment, and demographic advantages continue supporting the country's economic outlook. At the same time, analysts caution against unrealistic speculation regarding sudden currency revaluations. Currency values are influenced by economic fundamentals, market confidence, inflation, trade balances, and central bank policies. Sustainable appreciation typically occurs gradually over time, rather than through dramatic overnight changes. Vietnam's export-driven economy will likely remain closely connected to developments in the global economy. Demand from international consumers, especially in the United States and Europe, continues playing a major role in manufacturing performance. Strong export activity helps generate foreign currency earnings and supports economic growth. Financial institutions across Asia are also monitoring capital flows into emerging markets. If global interest rates eventually decline, investors may increase exposure to high-growth economies like Vietnam. That could provide additional support for regional currencies and financial markets. For now, the Vietnamese Dong remains one of the most closely watched currencies in Southeast Asia. Investors, businesses, and policymakers continue monitoring market conditions carefully as global financial uncertainty remains elevated. The future direction of the currency will depend on a combination of domestic economic performance and international financial developments. Vietnam's economy continues attracting global attention because it represents one of the strongest growth transformations in the region. The country has successfully expanded manufacturing, increased exports, modernized infrastructure, and attracted foreign investment at a rapid pace. These developments continue supporting confidence in Vietnam's long-term future. As we move further into the year, global markets will remain focused on interest rates, inflation, energy prices, and trade activity. These factors will continue influencing the exchange rate between the Vietnamese Dong and the US dollar. Investors should expect ongoing market volatility as financial conditions evolve. One thing remains clear according to many economists and financial analysts. Vietnam has established itself as a major economic force within Southeast Asia. While currency fluctuations will continue making headlines, the broader long-term growth story surrounding Vietnam remains one of the most important developments in the global economy today. Thank you for watching this latest update on the Vietnamese Dong exchange rate against the US dollar. If you enjoy detailed financial news, global currency analysis, and international economic updates, make sure to subscribe to the channel, like the video, and turn on notifications for future reports. We will continue bringing you the latest developments from global markets and emerging economies around the world.